You want to know why Bitcoin, ETH, and Sol rocketed so much this summer? I mean, macro played a role for sure, but one of the biggest drivers of that pump was something else entirely. You see, there was a wave of public companies called Digital Asset Treasuries, or DATs, that bought billions of dollars worth of those coins straight off the market. I'm talking more than 150 companies raising close to $100 billion in 2025, all for the purpose of stacking BTC, ETH, Sol, and even a few random altcoins. So that relentless bid, it was easily one of the strongest sources of demand this cycle. But here's the twist. Lately, that flywheel has been slowing down. Like those companies aren't buying as much, if at all. So what I'm wondering is the crypto treasury craze already over? Or is there more to come? Stick around because the answer isn't as simple as you think. Alright, before we dive into the nitty-gritty, let's rewind a bit. Because this all kicked off with just one company, MicroStrategy. You see, back in 2020, Michael Saylor made one of the boldest moves in business history. He took the entire treasury of his software company and slammed it all into Bitcoin. At the time, people thought he was crazy. But fast forward a few years, and not only have their Bitcoin holdings exploded, but their stock price has too. Why? Well, because if you can't hold Bitcoin directly, like if you're a pension fund or family office, then you can just buy MicroStrategy stock instead. So it was basically a levered Bitcoin ETF before the real ETFs were even approved. So yeah, MicroStrategy was the first of its kind. And once people saw the power of their flywheel, well, that was when the copycats flooded in. At first, it was all about Bitcoin, but then came the Ethereum treasury companies, and then the Solana treasury companies, and eventually even some random altcoins had their treasury companies too. So what started off as one CEO's wild bet turned into a whole new market category. Now, for a while, this playbook worked insanely well. Throughout 2024 and into 2025, these treasury companies became a relentless source of demand. Some days you'd literally see dozens of them buying Bitcoin or ETH at the same time. Like in June alone, there were 26 different firms that added to their Bitcoin positions. And if we take a step back and look at the overall numbers, well, they're really quite staggering. We got 150 plus companies, almost 100 billion raised in a single year, and over 4.5% of Bitcoin supply now sitting on corporate balance sheets. But it wasn't just Bitcoin though, because Ethereum saw the same thing. There were treasury companies stacking hundreds of thousands of ETH racing to claim that number one spot. So my point is, they weren't just buying, they were buying aggressively. And that absolutely helped push prices higher. But lately, something's changed because the pace has definitely slowed. Premiums on these treasury company stocks have come down, and some are even trading at discounts to their value of their crypto holdings. So what I'm wondering is, did the market stall because these treasuries pulled back? Or did the treasuries pull back because the market stalled? Well, either way, the cracks are starting to show for sure. So to better answer our initial question, let's take a look at the various signs of trouble here. First up has got to be the premium compression. Back during the hype phase, most of these companies traded way above their net asset value, or NAV, meaning you were paying more for their stock than the underlying crypto was worth. Now back then, nobody cared because the narrative was super hot. But now, many of them have slipped below 1.0. And when your stock is worth less than your assets, it kills your ability to raise money. And the entire flywheel effect freezes. But anyhow, second has got to be the expanded NASDAQ scrutiny. You see, the exchange is tightening rules on companies raising cash just to buy crypto. They want shareholder votes and more disclosures. And those kind of things slows everything down, especially for smaller firms trying to get in on this hype wave. Now, third is just the increased warnings about these DATs. Like Coinbase, for example, has even flagged that some of these companies are basically one-trick ponies. They load up on debt, use it to buy crypto, and if prices fall or they can't refinance, then they're kind of forced to sell. Now, unfortunately, that kind of selling turns the bid into a feedback loop. Like, sure, it's bullish on the way up, but it's absolutely killer on the way down. And this isn't just hypothetical, by the way. Like, we've actually seen this before. Remember the GBTC premium flipping into a discount? It's a similar story here. So history tells us that when issuance runs hot and premiums collapse, the frenzy phase is close to done. Okay, so that's the big picture here. But what about the actual companies involved? Like, can they still raise money and run their flywheel? Or are they completely out of the game for now? Well, let's take a look. Starting with MicroStrategy. So they've got over 500,000 Bitcoin already. But recently, they broke their own rule about not issuing more shares below 2.5x NAV. They said they wouldn't, but they did it anyways, so investors weren't happy about that. That can explain why their stock has been quite shaky lately. However, they've still been buying Bitcoin here and there, so they've proven that they can still raise as long as the window's open. Anyhow, next, let's move on to the MicroStrategy of Ethereum, aka Bitmine. They hold over 2 million ETH with a goal of buying 5% of the entire supply. And they still trade above NAV, and they have plans to stake their ETH, so that's good, because that would help them grow even if they're not raising. But lately, they've slowed down on new buys, so their engine isn't running as strong as before. Anyhow, next, there's SharpLink Gaming, the other Ethereum treasury company. They did slip below NAV recently, which normally shuts off the equity tap. So instead, they pivoted and started to buy back their own stock. That boosts the value per share, which investors like, but it also doesn't grow their ETH stack, right? Now, they do have some cash left, but unless they're back above their NAV, then the flywheel essentially stays stuck. Now, next up, there is Metaplanet from Japan. They've been raising through 0% bonds and other forms of creative financing. And the thing is, investors in Tokyo are still willing to back them. So that gives them a wide open runway to keep stacking Bitcoin. But yeah, there's a lot of other treasury companies, but if we take a step back and look at the field, we see that some of them are still raising, some of them are slowing down, while some of them are stuck altogether. Which means that the frenzy has definitely cooled off, but the big players aren't done quite yet. Now, I also want to share the other side here, aka the argument that this trend isn't over by any stretch. After all, institutions are still piling in. You got Fidelity, Citadel, Point72, and these are huge names that are still getting involved and backing ETH treasury companies or new DAT vehicles in some way, shape, or form. Furthermore, the yield component of this also matters, because ETFs can't stake ETH or park their idle cash in tokenized T-bills. But these DAT companies can. And some of them are pulling 5 to 10% from staking and DeFi strategies. So that compounds, and it can usually justify some premiums. Furthermore, global venues are also keeping the door open for this meta. Like, even if NASDAQ slows things down, you got Japan, Canada, and Hong Kong all rolling out frameworks for this. And lastly, the macro still looks supportive for now. Like, as long as the dollar stays down, rates are easing, oil stays soft, and the liquidity is flowing, then the backdrop will stay easier for these treasuries to continue to raise. Now, going back to my original question, is this craze over? Well, in my view, the mania phase is done. The days of random altcoin treasuries popping up are gone. But the strategy itself, it's not dead yet, it's just evolving. Personally, I think that from here, the market kind of splits. Like, there will be a few massive players that keep on attracting capital, keep stacking yield, and they become like the institutional players in this field. But on the other hand, there will be a long tail of DATs that kind of just fade out, trade below their NAV, and get gobbled up in mergers and acquisitions. Either way, if you ask me, my takeaway is this. If you're just following the headlines, then you're already behind, because these treasury companies are one of the biggest hidden forces in crypto this cycle, both on the way up and on the way back down. That's why in Retail DAO, we are constantly discussing this type of stuff with our fellow like-minded investors. So if you want to stay ahead of the curve, then we'd love to have you join us in there. Links below in the description.